to San Francisco in 1990 and then to Marin a year or two later. And I'm now in Sonoma County where I've been for the last 4 years.
Lovely.
Yeah,
Right
it's
on.
the far cry from the Bronx.
Yeah. Marin County. Do you know Meredith Brown by chance?
Meredith Brown. No, I do not.
Kelly could
I
be.
was in Central Marin. I lived in Greenbrae for 30 years.
Yeah.
And my offices were varied through that time. I started in Sausalito, then I went to Shelter Bay in Mill Valley, ultimately to San Rafael. And it was in San Rafael that my office building burned down to the ground. And from that point on, I have been working from home very
Oh,
happily. It's a change. It's it's an adjustment when you have an office and you have people there working with you and that team environment to then work at home and not have those people constantly surrounding me. The biggest thing I lost in this transition was learning new tricks on the computer.
yeah.
That's the one thing that I find that I probably miss the most, although fortunately I know enough that I can get by.
Yeah, but then if you have ChatGPT, it'll just pump it up. Like it just
Well, let's discuss that for a second because I had two shocks in the last 7 days. I've had two new client calls, both of whom found me from ChatGTP.
nice.
Now, unbelievable. When I'm telling you, my mind was absolutely blown.
Yeah.
So when are you do you have a consultation appointments to see them?
Those two people?
Yeah.
No, not consultation appointments because many of my people are, they're not here, they're further away. So what they have both done at this point, they complete my application and disclosures, which gives me the opportunity to legally and confidentially look at their insurance and medical information. So I've already have that received from both of them. First, we talk on the phone and I determine.
Okay, I'm gonna stop you right there because we're gonna segue over. We're gonna make a left turn. We're just gonna say good morning to everybody because just a really fast couple minutes, Carol Sue, you can get started and actually,
Go over that.
insert that into your
Excellent.
presentation because I think that's really cool.
Thank
That
you.
means your information is out there for chat to pick up somehow. So that's a good thing.
It's amazing to me
So I'm gonna say hi to Margaret.
Hi.
Rump Room Day. Roni, Sebs, Tammy. Hi, Tammy. Lynn's here. Anthony's here. Yay. JD. See, JD. Now I see you. Ron is here. Seb.
Yes.
1 minute. How was CSA?
It was fabulous. It was really fabulous. I'm very glad I went, and I'm thinking about going to Equip now. It's so fabulous.
I need to mute 15309.
Got it. Thank you.
Yeah, no, it was fabulous. It was so fabulous. I'm thinking about going to Equip, and the thing that was most fabulous about it for me, well, I mean, aside from meeting a lot of realtors and a lot of other like senior care professionals, was seeing how like serious the realtors were, right? Like no one ever talked about real estate that I can ever recall. I don't remember a single discussion about houses or, like square footage or a price per square foot or anything. It was really all about learning how to better serve our senior clients. So it was really a great group of realtors to be with. So I loved it.
Awesome. And did you get a chance to meet any of the Compass Plus members that are from across the country?
Oh, I met a crap ton of them. And I met a lot of the senior home coach people, right? So Catherine Ambrose, and a lot of the people that were there. Catherine won the Service to Seniors Award, which was well earned, I'm sure. And Yeah, no, I mean, like the networking was fantastic and the information was good too, you know, I mean, like there's just so much, it's like a fire hose, right? I mean, like it's basically
It
2.5
is.
days of info and it's a lot to like digest. So, but I downloaded the slides of the presentations that I went to and, you know, I'm gonna try to, you know, follow up with all the people that I met, and not just the realtors, but, you know, the other, you know, professionals, right? You know, so senior care authority people and, you know, the NIPC people and the NASM person, I never got to meet her. She was never in her booth. So I got her card, but I want to try and, you know, talk to those folks, you know, because NASM sounds like they really have it going on.
Oh yeah, for sure. Awesome. Okay, so I'm gonna ask 15309. Introduce yourself. Say hello, because I don't. This number doesn't help me.
There's a face. Nope.
No,
Is that
name's
me?
on mute.
Carol Gomez with Coldwell Banker, El Dorado Hills.
Hi, Carol.
Hi,
Nice to meet you.
nice to meet you. I just added this new Zoom thing, so I don't know, it doesn't have my picture or anything. I'm gonna have to work on that.
Okay, awesome. So did you just become SRES, or how did you get here?
I have been SRES, I think, for a couple of years, but I was working at the post office for over 30 years. So I just retired, and so now I'm able to start attending the meetings and um,
Wow, that's
You're current- You're
yeah, I had
currently an
a
SRES then?
I first got my license in 1990 with red carpet real estate, which nobody remembers red carpet. And then I
Oh,
went
I
to work for
do.
the post office for 30 something years. So it's my first and third career. So I'm
Welcome
excited to learn a lot.
Third
Yeah, thank you for
career.
your service. And what was your name again? This is Lindley.
Carol Gomez.
Oh, thank you. Carol
And you-
Gomez. Okay, welcome, Carol. I'm Lindley.
Thank you.
And you're in El Dorado Hills, right?
Yes.
Awesome. Awesome.
Nice place.
Yes.
Well, welcome. Thank you so much for being here. And all right. We're going to hear from Carol Sue today. I'm so excited with the innovative settlements. And just go ahead. Oh, I forgot to say hi to Larry. Hi, Larry.
Here's Larry.
Larry, he's there.
Oh, there's Larry.
He's a new SRES. He's from SoCal.
Congratulations.
There's Anthony. Yeah, Liliana's here. Yay! Okay, Carol
Look
Sue.
at all these people. Oh my God.
I know, this is so exciting.
Thank
We're
you.
just
Thank
gonna
you.
put
Everybody
everybody
has
out
it.
there and start talking about it.
Hi.
Okay, y'all ready, Julie?
Go ahead.
Blast off.
First of all, thank you all for showing up. That is so
Aren't you cute?
wonderful.
Okay, Lori. Lorrie.
Margaret, we need to mute you.
Oh, here, I'll hit it.
Lori.
There we go.
And what I'd like to do is, at the end of the day, if you have any questions, any thoughts, any concerns, if they pop up, stop me, because, or at least write them down, because I want to address anything that you have. What I do, it's called life insurance settlements. In a nutshell, it's a very simple concept, not unlike a reverse mortgage, except instead of using a home, I use a life insurance policy. And what I do is take that policy, there are requirements, and I can qualify somebody within a first phone conversation, go through what the process is, which is literally taking their policy. I present it to numerous qualified providers. Providers are the companies that have the specific licenses to buy policy. So I get it out to a number of them. Then I create an auction between the top offers. I negotiate the best settlement. My client is involved in the process in that I keep in touch with them constantly. And they know what's happening beforehand. They should have an idea from me if the policy is going to sell, if it's going to be a good price, if it's going to be challenging. And at the end of the day, if they accept an offer, Then I arrange for sales contracts, and we literally transfer the policy ownership from that individual to the company that's buying it. The individual gets the cash that's agreed upon. And that's the end of the transaction. They do have 15 days to change their mind and turn the whole thing back around if they have any second thoughts or concerns. So there's no obligation to do this. It is not right for everybody, but you've got 8 out of 10 policy owners walk away from their policies. They get nothing for it then. The insurance company gets to keep all the premiums and they don't have to pay the death benefit. So it's those 8 out of 10 people that has created this marketplace. The catch is we need to get to these people to let them know, don't just walk away from your policy when you don't need it anymore. Let's look into a life settlement and see if it's an option. That way, if the policy can be sold, they walk away with money instead of nothing. Whoever buys it will continue to pay the premiums for the remainder of that person's life. And then when the person dies, that company gets the full death benefit. So what they're really purchasing, they're purchasing the full death benefit, but they're paying out a part of it. So people get to use the money now while they're alive, and the benefits go to somebody else later. So in that, it's very much like a reverse mortgage, which I'm going to take a leap here that y'all understand the basics of a reverse mortgage, right? So somebody gets money using the home as collateral. One of the main differences is that with a reverse, there are qualifications. You need to have the home, X amount of it has to be unencumbered. When you get the mortgage, you have interest on it, you need to pay it back. A life settlement isn't like that. It's not a loan. It's a one lump sum cash payments, and that's it. There's no paying it back, nothing like that. Why am I going blank? Early for me, I'm sorry. I was up late last night. What else can I tell you? The settlements themselves, there are 2 kinds. There's a life settlement, who is for people over 65 with no terminal illness. And there's a viatical settlement. That's for anybody, any age, who has a terminal illness. That is also tax-free. If I get the money from a viatical, it's tax-free. When viaticals started to fade out, primarily because people with AIDS, who were the primary beneficiaries of viatical settlements, when the medications came out that started to elongate their lives, then we discovered 9 out of 10 policies lapsed. That is exactly how the life settlements evolved from the viatical settlement business, which started back in the early 90s. And life settlements, the first life settlements were done in the late 90s, like 97. And then by 2000, early 2000s, a lot of companies jumped on the bandwagon. Many of them, the majority of them, are larger financially backed companies, which is good news because it's institutional funds. The policy seller and whoever buys it should never come in contact with each other. But on the other side, on the other hand of this, is that the buyers are now much more money-driven than they've been. And the providers that buy the policies, they need to answer to their investors. The brokers like me, and there aren't a lot of us, answer to the clients. My responsibility is to the client, the policy seller, to make sure that they know what they're doing if they want to give up this asset. I go over their other assets in general. I'm not a financial planner, but I go over them to make sure that they don't need this insurance anymore. I ask, why do they want to sell it? What are you planning on doing with it? Especially if there's somebody, like now I'm working with a woman who's in hospice. I'm not telling her yet, but I think it might be too late for her to be selling the policy and taking a discount on it. So those questions also are very important when you're dealing with seniors or with somebody who's ill. We need to put their needs first and foremost. It's not about what's going to get me the most commission. It's about how do I best take care of this person and their family. And that's why I think we're all here, is to learn various tools that we can use to help people, even if it's not our thing. I've many times mentioned to people or asked them if they've considered a reverse mortgage. Maybe that's a better option if they still need their life insurance coverage, or if they're not comfortable having their house, with a lien on it. But I find that it's best to review both. Find out, how much is this going to get me? How much is this going to get me? What are the strings attached? And then they could make a knowledgeable decision. And what
I have a question.
Sure. Please.
The client that you spoke with that was in hospice, that you were thinking that you had an inkling that it might be not the right timing.
Right.
How did you arrive at that thought?
Well, I know from my experience that it takes a while to do this. It takes anywhere from 2 to 4 months. We also know that hospice generally is determined to be 6 months or less. So when I look at that, let's say I sell her policy and I get her X amount of cash. If she is bedridden and really can't do much of anything, what is she going to do with that money? How is it going to benefit her? That's what I'm looking for.
So did she come to you with a need? What was her need?
She wanted cash.
For what?
I didn't ask yet.
Who was telling her? I mean, if she's in hospice already, is she needing money because she needs to pay for something? Obviously.
I don't know yet, because the application just came in 2 days ago.
Okay.
So I'm still investigating, and I still haven't determined that I can sell her policy. So I need to talk to her benefits manager first. It's a group policy, which she did not tell me at the beginning, and group policies can't always be sold. So once I determine that what the situation is with her policy, then I'll call her and have that other conversation. She's not in a hospice facility now, Julie. She's home. I got a call from her niece yesterday, who just came up there to stay with them and help them. So it's a good question, and I don't know yet. I can tell you a wonderful story of one of my first viatical clients. His name was Joey. Joey lived in Texas. He had AIDS, and he was one of the sickest people I've worked with, certainly at that time. And he was dead set on selling his policy. And it was a sizable policy. I don't remember. It was at least $250,000. And he's going to get a good settlement with a very short life expectancy. But I kept on thinking, what are you doing with all of this money? Why are you going to take such a big hit on it when I already knew he had a family and siblings and all this? So I had that conversation, Julie. Well, Joey told me, and he confirmed it after the fact, he was going to pay off his parents' mortgage. He was going to pay for his sister's wedding. And then with whatever was going to be left, because he was bedridden, he was going to get himself a kick-ass audio-visual system to take up the whole wall opposite his bed. That's good by me. That sounds like a great plan. You bet I'm going to help you do it.
Carol, what about hybrid policies that there's life and long-term care or life and annuity? Can you work with those as well?
I have yet to see one, but I would certainly look at it. And if there's a way to get them cash from that without affecting the long-term care or the annuity, then we could proceed. Sometimes it's about just separating the two vehicles out from each other.
Well, usually it's an either or. You can't separate them. So probably wouldn't be able to do it, I guess.
Well, if they wanted long-term care and life insurance, the question for me would become, do you want them both? And if they do need a policy for long-term care, Skip, then that's probably what they should keep.
Well, no, that they'd have to actually get both a life policy and a long-term care policy. The hybrids they have them both, but you don't use them at the same time. If somebody dies before they need long-term care, then the life insurance is used. But if they need long-term care, they'll use that, and then the life insurance is not good. So it's an
Right.
either or.
So then it wouldn't be a viable
Okay,
sale.
that's what I figured. All right.
It's like this woman, the same one, the hospice one, who I now found out yesterday, it looks like it's a group policy. Well, a group policy is owned by the company, and it's the individual employee who gets the certificate of insurance. So if somebody's going to buy a policy, they want to be able to control it, which means they have to pay the premiums. And when somebody else, in this case, the company, owns the policy, then a new buyer cannot control the policy and pay the premiums. So if there's any chance of me selling this far, I have to separate it out from the rest of the group.
So that's a good segue on employer provided life insurance.
They're very problematic. They take much, much longer. And because as more people learn about this option, what I always advise is when you're retiring or leaving work, take that optional coverage, not the basic. That has to stay with the company. It's usually $10,000 or a 1-year base salary. Then they get optional, which is much more coverage. But if they leave and they can convert the optional to an individual policy, I could much more easily sell it, excuse me. Group policies are a problem. I tend to stay away from them now, although it is the way the industry started. So we're back to, I'm one of the few left that actually know what to do with it. Because so many people got into this after AIDS and after viaticals and after 2000, they don't have the basis of the industry and all the things we did for the 10 years preceding that to work out all the kinks and get to know what's available and what's not available, what the options are. So I'm turning off my phone so it doesn't keep on beeping at us. It's very interesting because when somebody comes to me, I see possibility. I don't see problems. The problems, of course, show up, and then I try to figure out how to overcome them to help the person. When calling most other companies, and I've had people make the phone call, I write the script, and I say, do me a favor, this is what I'm hearing nasty things about this company. Call them, say you want to sell a policy, see what happens. And they're money driven. It's like, okay, how much is your policy? I don't even ask that question right away. I want to make sure it's at least 2 years old. It's got to be past the suicide and contestability periods. And they have to be either terminally ill or over 65 with a serious illness. The bottom line, folks, which I could never put in writing, is that these days, the sweet spot for buyers is somebody with an 8 to 12-year life expectancy. They will go up to 15 years, but that's about it, because they're going to have to pay the premiums for all of those years. So when they factor in what they can offer somebody, they first take the life expectancy, which we have specialized longevity companies that figure that out. We get, depending on the company that's buying it and the size of their policy, if it's a large policy, which is what I specialize in, they will get up to 3 different life expectancy reports. Then they'll take the average and make their offer based on that. But if the premiums are high and the person's anticipated to live longer, that's going to bring down any potential offer. So the key is, as far as getting the most money, the bigger the policy, the shorter the life expectancy. I can also make a lot of magic with bigger policies. I can break them up and sell only part of it. So, of course, this is all contingent upon the policy itself and what the insurance company will work with me with. But I can often sell the policy, part of the policy. They can keep part of it and then sell the rest. So they get the best of both worlds.
What's the ideal policy? Is it whole life? Is it universal?
No, actually, it's universal life, because we
universal.
manipulate them the most. And I could do term policies if they're convertible, which is amazing, because the 85% of term policies lapse or they don't renew. 85%. So if those policies can be, pardon me, can be converted, and the rest of the situation works, that's really worth looking. I mean, now I'm doing another one. The first man that found me on ChatGPT, on the surface, this guy does not qualify at all. Not even by a long shot, but I'm trying. And he doesn't qualify because he's only 53 years old. And another reason he doesn't qualify is because although he's very sick, it's a heart issue. And heart disease is very difficult to predict. So people don't want to buy heart disease because people can, they can keep on living. What I see, he's got $1 million policy. So that is beneficial for a provider. That's what they want to see. I see $1 million policy that is very inexpensive because it's term for the next 15 years. So if I can get this guy 10%, that's $100,000 in his pocket. The company, if I can convince somebody to buy this, over the next 10 to 15 years, they're paying less than $20,000 in premiums. If he dies, they can chalk it up as a bad investment, because for them, it's not that much money. These people are dealing with hundreds of millions of dollars all the time. So for them to take a hit of $125,000, it's like no biggie. Are you smiling, Julie? It's crazy, right?
No, I'm just like, why don't they just put a lien on the like, quote, a lien on the policy, and so when he does die, they get their money back.
You mean
it's $1 million?
Right. Well, what I'm hoping to do is get them to buy it. There's no such
for cents on the dollar, and then
if
he dies, then the buyer gets the $1 million. Isn't that right?
Yes, absolutely.
Okay.
But in order to get the settlement done, the buyer has to offer him cash, because remember, there's no strings attached. So the buyer is going to offer this cash settlement. If my guy decided to take it, he's going to sign over all rights and benefits to the policy.
Okay, well, 10 cents on the dollar doesn't sound very...
Well, think about, it doesn't sound like a lot, exactly, which is why I'm trying to find a buyer to pay what doesn't sound like a lot. But to my guy, who now is sitting on a piece of paper and he wants cash, he has another policy, so his family is covered. This is just an extra policy. So he doesn't need it, he doesn't want it. And if he can get money, that's what he wants now.
Oh, well, those two things right there make all the difference in the world.
Oh, well, of course, that's
Yeah.
the people that let their policies go, Julie, it's traditionally because their original needs for getting it have changed.
Mhm.
So they just don't have those needs anymore. Or maybe it became too unaffordable. These term policies are built, actually UL is also, they're all built to become higher in premium expense as the term goes on. So people leave them because it gets too expensive. With these inexpensive term policies like this gentleman has, when he converts it, and it'll stay level until he's 75 years old. So we've got a solid 15 years easily to pay $1,600 a year for $1 million of coverage. Then, assuming he turns 75, he has the option to convert it to a permanent plan, which locks in the premium at a higher amount. That's when most people let go of their term policies. They don't go for the conversion because it's so much more money. In this case, his premium is going from, I think it's $1,600 a year to 7,500 or 75,000. I gotta look. But the potential buyer, the potential new owner, they now have an asset that costs them next to nothing, $1,600 a year for $1 million payoff for at least 15 years. That's
Yeah,
a good
that's $133 a month for $1 million worth of coverage.
That's cheap.
Yeah, that's cheap.
That's cheap.
Yeah.
Which is why I think it's a good risk
Mhm.
for the right buyer. But the truth is, it's a total long shot. I tend to be very positive. I want to make the deal happen. I'll find a way that, okay, this makes sense. Let's try this strategy. And now it's about me finding somebody who has the proper licensing and money to buy into this great idea I came up with.
So does a potential buyer want to have a statement of longevity of the policyholder?
Absolutely. When somebody first applies to me, when somebody first contacts me, we have an extended conversation. I determine then if I think I can help them or not. You'll notice that I tend to stay away from definitive statements because I want people to have hope. And I don't want to ever turn anybody down, but at the same time, I will never give a guarantee. The only thing I can guarantee is that I'll do the best that I can. I will always be honest and I'll be there for you. You know, that's all I can really guarantee. But we have the conversation, assuming I think I can help them. I send them an application, which includes a HIPAA release, an insurance release, and general disclosures. They get that back to me with a copy of their policy. And now that medical records are all accessible to us online, they allow me either into their medical records or they send me a digital copy. Then I review everything. I make sure the insurance has everything a buyer will need for it. And within the medical records, I review them all. I am not a physician. I know enough probably to keep myself in danger, but I read the summaries, for example. I go for the things that are written in plain English, and then I'll backtrack if I see something that sounds interesting to me and I need to know more. Interesting being, this may compromise his health. Let me learn more about this, because then I'll use that to help get more money. So I now have the medical records. When I decide what companies might have interest in it, I will call each one. I have a conversation with them. I confirm that, oh, this sounds interesting. Yes, we'd love to see it. I send them everything. They have internal underwriting for medicals, And if that passes the initial criteria and the policy is desirable, then they'll take the medical records and send them to the longevity company. So if it's a small policy, if it's like a $200,000 policy, which I know is not small to everybody, but a policy like that, they may only go for one report plus their internal. But when we're looking at $10 million policies, you better believe they're going to be getting a minimum of 3 different reports because they want to be absolutely certain of this person's life expectancy. So that's a big part of it. Once we get that number, then we look at, okay, for all those years, how much do we have to pay in premium? So that comes off the top. Then they're looking at whatever other expenses there may be in-house, which I was told by more than one provider over the years, it comes to about, on the average, 6% is internal costs and marketing and all this. That's where they came up with the original 6% limit on commissions. There actually wasn't a limit. It was just 6% was the commission that was paid to brokers for doing all the work ahead of time and bringing the package to the provider. In the beginning, I don't remember, I don't even know how that 6% came about. But that's when I started questioning, you know, what if you got it yourself? And that's when I was told, well, it's about 6%. So now that we're much more regulated, and now that insurance agents legally can do what I do without any training, they had to put real caps on commissions because the insurance agents were taking advantage. You know, they're trained to be commission driven in a lot of ways. And I believe what I do should be compassion driven. And kind of never the twain shall meet there. It's been an ongoing battle with me and the Department of Insurance to get these insurance agents trained and somehow disassociate their life settlement work from their life insurance work. They can't be selling a policy on the primary market and then try to resell it down the road. That's a conflict of interest. It's like, what are they really doing? If they want to sell a policy on the secondary market, which is where I am, why are you selling them the policy to begin with? You should be selling them a policy because they need insurance.
How many insurance agents out there? If I could throw a rock and hit 6 of them. So do they know this business? Do they know this product? Do they?
No, that's the problem, Julie.
Right?
They say they do. Many of them think they do, but they don't. What is happening more than anything else is if somebody goes to their insurance agent, that agent will immediately send it to a provider. Well, you don't want that to happen because the provider is now looking at a policy exclusively. They have no competition. They have no impetus to sell it at a high price. So that's one thing. Many other insurance agents are captive. So they can only sell the policy to one company. Same problem. They're not getting any market work done. They have no idea of what that policy can really bring. Another thing, they might try to broker it on their own, but how do they even know which companies are the better companies? Which companies have money this week? Which companies are owned by a bigger company? That's another thing. We've got 2 companies now that are advertising on television. They're both very large companies. They're the 2, probably the biggest in the country. These 2 companies are like night and day.
Which is good to know and good for us to know. I'll tell you why, because when we work with clients, homeowners, families of homeowners, and we start to hear things that, this type of life settlement might be an option for them, we need to know what to listen for. And then they're going to say, well, I saw that TV commercial.
Don't call them. If somebody can, they're like night and day. One company is a really good company. The other one is the worst on the planet. And you can Google them both and just Google lawsuit or fraud or something like that. And you can pretty easily see what the patterns are. One company is completely transparent. The other one is family owned. One of them, the family owned one that's not transparent, has been going around buying other companies. So if I have a policy to go out to bid, that's when I send it out to multiple potential buyers. If I were to send it to that one company and then one of their smaller companies that they bought, I would think, or this insurance agent that doesn't know any better would think I'm getting two completely different offers. No, it's all going through the same thing. So you've got one company who now owns 4 or 5 companies. They're marketing them all under different names. They're in different states. How are people supposed to know even to check this out? Nobody
Well,
knows.
who are these secondary companies that are buying? I mean, are they,
They're called providers. And the best way to determine the right providers is on a state level. They're licensed state by state. So each state's Department of Insurance will have a list. But honestly, even those lists are not comprehensive because the insurance departments don't quite understand the whole picture.
so they're not necessarily big wirehouses, Fidelity and Vanguard or
No.
BlackRock.
They would be the ones, Skip, who provide the money to the providers. So
They're the investors.
exactly the investors.
They're the investors.
Skip, each provider. Now, provider is the one that has the license by state to legally purchase policies. So the only people I could sell my policies to are providers. Now, a provider gets their money from the investors. It could be a Fidelity. It could be a small equity fund. It could be a bank. It could be any number of things. Of course, it's all regulated and has to be approved, but it's all those investors that give the providers the money that they then use to buy the policies. The catch is, and this is something else insurance agents would not know, each provider has a different set of investors. Some of them are exclusive. Some of them are open to various providers. Some of them are foreign funds. Some of them may get an infusion of money on a Friday and call me and say, Carol, send me everything you've got next week because we got to place this money. So in a week like that, I can get them to pay a little bonus.
So what I'm hearing is that the providers are regulated by the Department of Insurance, but the bigger houses are obviously SEC regulated then, and
yes,
like a wire. Okay.
Yes. Although I mentioned ChatGPT is now referring me. The first person said, oh, well, they referred 2 different companies, one on the East Coast and one on the West. Well, it ends up the other company ChatGPT referred it's called the Welcome Funds, a man named John Welcome, who's been doing this as long as I have. Ironically, we have never, ever worked with the same client or been in any kind of competition, which in itself is strange. But what's interesting that I didn't realize until I started looking more closely at them, they're a broker-dealer. Now, how is that not a conflict of interest? So not only are they brokering policies on the secondary market, they also have a whole investment end. So I don't do anything like that. I only do settlements. Viatical settlements and life settlements is my exclusive business and has been for more than 30 years. This is my 33rd year in business and my 34th actually doing this. So, John has always had a clean business as far as I know. I'm not bashing him, but I'm just pointing out it's a very different company. There are other people that say they're life settlement brokers. I have not met any of them. I have tried to get to know a couple of them. There are two different ladies that I see have been doing this for a while. They're both from the Midwest. They're not interested in getting to know me. So I don't know what that's about because it's not typically the response I get. Not that I typically, if somebody is new in the industry and
Midwest is hardcore competitive.
sorry, say again?
Midwest is hardcore competitive.
Oh, really?
But I mean, I've been noticing that in the senior world.
Huh.
It's the only time I ever see them aggressive.
It's weird.
Yeah,
I mean, we're all in this to help each other.
totally.
So where are we if we can't reach out and help our neighbor?
Yeah.
I mean, and that's what I'm asking all of you to please help me. Help me get to a place where maybe I can retire because I feel like I can't leave this industry until many more people understand that this is an option. Sick to death over all these people walking away from their policies.
Okay, so that just leads me to this question. So when we're out talking to prospects, senior homeowners, the families of senior homeowners, especially the adult children that have just been informed that there's a challenge going on with their parents.
Challenge, good word. Yeah.
And it could be medical, it could be financial, it could be all of the above. And then we start to listen for key phrases and key situations. For us as seniors real estate professionals and CSAs, we're pretty good at being able to ask a question like, oh, I understand that's what's going on. When, if we introduce the idea of, does your, like, if you're talking to the adult children, do your parents have a life insurance policy? And have you asked them about that? And they'll kind of look at you, and then you'll say, well, there's some opportunities, there's some options there that you need to learn about because that could probably help you with your situation. Is that the
Right.
kind of conversations we should be having?
Absolutely. I would recommend that you put on your original applications, do you own a life insurance policy? If there's enough room, you can add or ask them personally, would you be interested in learning how to access cash from it in a way that's not with the insurance company? It's almost like, I don't know why this is so hard for people to understand or learn about. I know that people don't like to discuss life insurance because it equates death. But this is exactly the opposite. I'm providing cash for people while they're alive so they can use it while they're alive.
It's
long
a
as they
financial
don't need
asset.
it.
Yeah.
Exactly.
Yeah.
Just like a house or a car.
Yeah.
But that's never how it was sold. It
Oh,
was
yeah,
sold
that's
for the
true.
rest of your life. This
Yeah.
will protect your family. If you have a mortgage and you die, this can pay off the mortgage. So when somebody sells their home, do they still need that policy? If somebody is retiring from a small company and they have key man policies on each other, that's a policy that is no longer needed. Maybe it can bring in some cash. So it's a matter of, do you have a policy? Did you know you can get cash from it? Would you like to learn? No obligation. You don't have to do anything. I mean, I will even talk to people without them telling me their name. I don't care. I want them to have the information. I want them to know you've got an asset there. Do not walk away from it. Please don't do that. Check it out. And that's why I've decided to just do these free like policy analysis. I'm still not quite sure the best way to what to call it. It's a policy settlement analysis. I'm not analyzing a life insurance policy like a life insurance agent or financial planner would.
Why don't you call it strategist?
Ooh,
Life
I like-
settlement strategies.
huh?
Or thingy.
Or thingy?
I
I like strategists. Thank you.
Okay,
Jessica, I'm
life
gonna
settlement
help you with that.
strategies. Yeah. Life settlement strategies.
I like it. I like it.
How does that sound, Jessica?
I like strategist.
Life settlement strategist.
Specialist,
Strategist, because you're creating a strategy for people.
Yeah.
It's
Carol,
true. I
it
do.
seems like if you want to get the word out, the people that you want to work with are financial planners. This all falls in their realm. And,
Exactly.
I got my CFP back in the early 90s, and there was not one thing in the course about settlements. And, well,
Right, there
because it was
wouldn't
so
have
new
been that.
then.
There
Yeah.
wouldn't have been then, Skip.
Yeah, but
That's
now I
definitely
think it's
important.
like all the other strategies, reverse mortgages and
Mhm.
all the other various things that they can do, and you really need to educate them
Yeah,
on what this product is and how it can be used and what you can do for them.
you're
So that
absolutely
seemed
right.
like
And you'd be amazed, even to this day, I would say at the most, 3 out of 10 that I speak with heard about life settlements, and even they don't really understand them.
you might want to
Amazing.
try contacting the Financial Planning Association and see if maybe you can take part in some of the local chapter meetings to present on this, or
Hmm.
even like our area has a regional NorCal conference every,
Mhm.
when is it? I guess the end of May, which is much bigger, but certainly, you might be able to find ways to get the word out, maybe webinars or something that
I
they
think
have,
Thank you.
and you could
there's
do that.
also
Mhm.
and he's part of the FPA, Parker. There's this new company. There's two called Care Alley, and the other one is, I want to say Water Lily. But Care Alley is creating this big software program to help financial planners that are dealing with people that are seniors in the senior space. And they're very connected with financial planners. But I sent you a LinkedIn request, Carol. So let's
Oh.
connect and I can put you in touch with them.
That would be great. Thank you. And Skip, if you think of it and you can send me information on that conference you mentioned or any other ideas, I appreciate it.
And
I'd
just
really
Google,
like you people, the ones that are sitting here right here now listening to it, to mention it to your people. You can ask your colleagues and your clients, have you ever heard about a life settlement? Do you know that you can sell your policy for cash? When you bring it up, one or two things are going to happen. Either they're going to blank out completely because they can't discuss life insurance, and that's it, walk away. Or they're going to be very interested and they're going to want to know more. That's the person we want to pursue to make sure they have the right information. And obviously, if they want to sell their policy, I'm here to help them. But you can always put them in touch with me. You can, get it started and, let them know that you have somebody that can answer all their questions, assure them there's never a fee and that I have the experience and all that, I love answering questions. I love talking about this. So anybody that calls, it's like a button is pushed with me and I start going on and on and on. So absolutely feel free to give out my phone number, give them my website, which I am in the process of redoing. I think it'll be a lot more succinct. My current website, which is innovativesettlements.com, has a tremendous amount of information on it and many pages, and you could just dig and dig and dig and find more stuff. I'm going to make a much cleaner one. I have not settled on a name yet, but I have several different URLs, and now I'm going to start playing with strategists.
Does,
But no,
does anybody have anything in anybody in their databases that this might connect with?
you know anybody who's older and with serious health challenges?
I think hi Carol, this
Hey,
is
Lynn, how you
Lynn,
doing
and thank you
today?
so much. And so coincidentally, my husband and I started our working lives selling life insurance, him in Japan and me in the United States. I was with the Equitable, but I was right out of college, and it was like, who's gonna think about, that when you're right out of college?
Right.
And,
Good
so I
point.
ended up, going in education after that. And, but I do realize that there are these, like my parents, they probably have so many different life insurance policies that they don't even know about, to be honest with you.
Somebody like
Yeah.
that is perfect, assuming their
Yes,
life expectancy falls into range
yes.
because
And
they're
both,
overinsured.
yes, and my dad,
Sell one, then they
Yeah.
have money to pay the premiums for all the others.
right. So I'm thinking that I'm going to introduce you to them as the not the guinea pig, but get to know your services.
A beta.
Like I have Mike here. I don't know if he's here, but I'm introducing him to my clients, and I used him on my parents and saw what he was able to do. So now I can be well versed in articulating exactly what he does to others, just like. And then, are you in the area? Do you live in the Bay?
I live in Petaluma,
Oh, okay.
and most of what we're doing these days is on the phone
Or on Zoom.
FaceTime, on Zoom.
Okay.
That way I'm very accessible.
Okay, wonderful.
Getting
And
you someplace
yes.
physically, that's another story.
Yes, and I'm sure Julie will have all your information in
She
somewhere.
does.
But you,
I would be honored to look at your parents.
yes,
You might want to talk with me first privately.
yes,
So-
I will do that. Yeah,
Okay.
and then you do Zooms, right? I mean, obviously you do, but like Zoom consultations, like 30, 40 minutes or so.
I can,
Okay.
as long as you send me the link to get to it.
Okay,
I
no
have
worries.
never tried doing a Zoom with me starting it.
Oh, no problem. I'm expert, so I'll do. Thank you, Karen.
Okay, if you can
Appreciate it.
teach me, and you teach me, I'll teach you.
Amazing. I want to say hi quickly to Sherry. Hi, Sherry.
Sherry, it looks like
Hi.
Julia Roberts from here.
I haven't seen you in a while,
Yeah, I've had all kinds of crazy stuff going on, but I'm back.
but you're doing good, huh?
Yes. And actually,
Awesome.
yesterday I passed my CSA.
Yay!
Excellent.
Congratulations!
Good for
Seth,
you.
did you hear that?
Hey, yay.
Congratulations.
Seth
That's
just got
awesome.
back from Baltimore.
I just got back from Baltimore.
The conference.
Oh, yes, yes.
Welcome aboard.
Thank you.
Did they mention where they're going to have it next year?
Denver.
Denver, okay.
Hey, Liliana.
Hi, Julie. I do have a quick question for Carol.
Sure.
Hi, Carol.
Hi.
This is not about my parents, but I just wanted to ask you this question. My husband and I obtained our life insurance about 13, 14 years ago. And based on what you explained about the policy analysis, what would be the recommendation from your perspective? When should I start looking into this policy analysis? How many years after?
Well, policies cannot be sold in their first 2 years. So honestly, with my belief that everybody should know about this, I believe anybody who has a life insurance policy should know that this may be an option for them down the road. So
Mhm.
I would be happy to look at it immediately. That way
Okay.
I can let you know this is not going to be sellable because of. This is what I like about it. This is the policy that you should definitely keep because this is
Oh,
Frozen, must be cold there.
She'll be back. Or maybe not.
Maybe.
something we do something with later.
Wait, here.
She's gone.
I'm waving. I'm hitting on her. It's not
So
working.
I'll give you all the information.
There
You-
she
Me?
there she
Hello?
is.
yes.
Froze.
I was gone or Liliana? was-
Yeah, you were.
froze.
Oh gosh, I'm so sorry.
That's okay.
I haven't moved. Hey, call it the Sonoma satellite. Okay, what I was gonna say is I would look at it right away. I don't think that it's just information to give you. So, and then you can always come back if something changes, if you have new
Mhm.
questions. And basically you have this in your memory banks. You know, it's a tool. Put it in your closet until when you need it.
Perfect.
Then,
Thank you, Carol.
if it shows up, if their health changes, if the finances change, whatever it is, then just call. You already have the basis. You already
Okay.
know that this is something we may be able to use at some time. So even if the premiums get high, let's call Carol before we would just give up the policy.
Wonderful. Do we have Julie Carol's contact information?
I put the link in profile in the chat, and that has all our
Perfect.
contact info.
Thank you, Skip.
Thank you, Carol.
My pleasure.
Thank you,
My
Skip.
pleasure. Really, I enjoy doing this. I have no other life. We're gonna work on that soon. I had a lot of health challenges the last few years, including not being able to use my dominant hand, which is why I say, oh, I have no other life. It's been great for my work. I've been able to write, I've been able to reach out to people, which is really a lot of fun. I just love doing this and teaching people about it. And, you know, from that, I end up getting some business and
She froze
It happened
again.
again. Oh, well.
But she called it the Sonoma satellite.
Well, the picture said that her bandwidth was low, so I don't know what you can do to expand that, but that must be the problem. Anyway, we can actually talk about next week
Yeah.
while we're waiting. We're going to have Leland Breland talk about age and personal safety. And this would be true for, well, especially for the female agents that are showing open houses and meeting with clients and so forth. But he's done presentations like this before, and it's been quite useful. And also on Thursday, SRES is having their twice a year meetup. It's at 8 o'clock our time, Pacific time, and I don't have the link for it, but those of you that are SRES might be able to find it on the website, or you haven't you know where it is, Julie?
The link, it's in the professional newsletter.
Oh, you put it in there?
No, it's in the July-August SRES professional
No,
newsletter.
but you put the personal newsletter in, or professional newsletter?
Well, everybody can access that on the portal, and they should get the email from them. as
Okay,
well.
all right,
Yeah,
yeah.
yeah, 8 o'clock Thursday morning.
Ugh.
It is early, I know, but that's okay. That's the national networking forum. So
It'll be nationwide.
yeah,
This
that-
coming
am I
Thursday?
back?
Yes.
there she is. She's back now.
I am so sorry. I'm not moving. I don't understand it, and I'm ready to have a hissy fit with who is it? Xfinity.
No worries. Don't worry. We were just talking about what we're gonna do next week. Yeah, look, she froze again.
Oh, come on.
Come on, look.
Okay,
Poor
well,
Carol.
this is terrible.
You're fine. You're fine.
Am I
We're
okay
talking
now?
about next week. So,
So anyway, yeah, I'm happy, Liliana, to look at those policies and discuss it with you. No worries. Anybody
Uh-oh.
really important that nobody ever speaks about anymore. And that's when somebody is terminally ill. You know,
Right.
and viatical is now defined in HIPAA as having 24 months or less to live. I don't stick to that. Typically, I make up my own rules. If somebody's over 65 and they're seriously ill, I will always try to fit it in as a viatical because they will get more money that way, and the money they get is tax-free. So
and probably statistically, they're outliving some of those rubrics, right?
that's exactly why life settlements began. Because when protease inhibitors came out for people with AIDS, and in August 96, it was announced that people with AIDS are going to live longer. And the people with the money in my business lost their minds. What are we going to do? These people are going to live. It's like, oh my God, what a shame, you know? And that's when we decided, or they determined, that 90% of the policies lapse. That was in 1996, end of 96. So now it's closer to 83, 84, 85%. So the work that we've been doing is actually making a difference. And people are learning about it just very slowly. And that's why all of you are so important, to get our seniors to know that this is an option. And I do work with, caregivers, families, financial planners, attorneys, anybody who has the legal authority to help these people, I can work and share information with. I don't share any information with your typical referrals. That's, you can have somebody call me directly. I'm very accessible. The phone number that you all have is also a number that can be texted. Email is available. I try to get back to everybody within 24 hours. When I do a policy analysis for like Liliana or Linlin, what I will, that takes a little bit longer because I will always put my active clients first, and I put viaticals in front of them, no matter what the size of the policy is. I try to put the people's needs first, so that's how I determine what order I do things in, because I no longer have a staff. I like it that way. And it gives me complete control, and I work each case myself, so I really know how to sell it the best because I understand it better. I know what the family needs or they want, and I know my buyers very well as well. So I know who to choose. Oh, I was telling you how different providers have different investors. Some are exclusive, some cross over each other. So it's really important. What some brokers do, which should scare anybody off, is that, oh, I'll blanket the market for you. No problem. I'll make sure everybody sees this. That's the last thing you want to do, because the providers that know what they're doing, first of all, it's a really, really small industry. So we all kind of know each other. There are no secrets. If there's a big policy around, there are people that are going to start fighting over it. And if they fight over it, others, the good guys, say, good, I'm out. Let them fight. And the agent ends up losing the case because they don't have control of their people and they don't know enough about the providers to deal with them appropriately. I had a provider literally take a case away from me. I already had offer and acceptance. I called to order the contracts, and next thing I know, they're calling my client directly. you just can't trust anybody anymore. When money is involved, people lose their minds. And
Yeah, we know that pretty well.
isn't it amazing, Julie? I was never brought up this way.
Wow.
You know, to me, it's ironic that I ended up in a serious financial field because it's the antithesis of what I'm really about. You know, I've never been one to stay within the lines. I don't break them, but I'll bend them, which is why I ended up in this industry. I didn't like what I was seeing back in 1991. I heard that there were several providers, one in California, several on the East Coast, and individuals with AIDS, which was my experience at the time, would go to these companies who would buy their policies. I thought this is fabulous. And I was just, you know, kind of setting things up. We didn't know then that this was a real business. But then I heard that somebody had gone to a company in New York, offered them $10,000 for the policy, just like one of those TV companies. And they took the offer. They thought I'm going to walk away from this policy. I paid like next to nothing for it. Definitely give me the $10,000. But then they heard somebody else with a very similar policy got a whole lot more money from a different company. And that was the catalyst for me to say, okay, these people need representation. So that's when I started the brokerage end of this, so that I create the file myself and I send it out to multiple companies. I confirmed right away that $10,000 company, and I never sent them business again. So when I say I bend the rules, I don't do things like other people in this industry, probably because I'm so hyper focused on the individual who came to me for help. I haven't really analyzed it much, but I know in general, I have always followed my heart. And that's what led me to this. That's what keeps me so passionate about it. And every single time I get to say to somebody, okay, you can check your bank account now. That money should have been wired this morning. You know, it's a gift. It's a gift. It's a gift for me to be able to help people in such a big way. And I love it, but I don't have enough people to help now.
Well, here we are, ready to help.
Okay, so back to those companies. If somebody says, well, I'm going to call this company I saw on TV, you never want to say, don't call them, they're bad. I mean, I don't exactly do that, but I will say, for example, I've been told from a good source, more than one, that they spend $3 million a month on advertising. Now, if a company that's supposed to be buying policies from people in need, why are you spending that much money on advertising? This is, of course, the same company that is buying up other businesses. This is the same, they don't play fair. That's the bottom line. They have their way of doing things. They like it this way, their way. They're adamantly,
So when we're talking to the consumer though, and they say, well, what about those people on the TV commercial?
I would say, well, they buy policies directly. So you're better off dealing with somebody who doesn't have a vested interest in owning your life policy. You want to deal, if they want to go direct,
they're a buyer owner, right? They're a buyer, they're not a broker, they're a buyer owner.
You know, I'd even suggest that in order to, you know, not get into trouble and be overstepping your boundaries, as soon as the subject comes up, just refer them to Carol or somebody like that to be able to do it, rather than giving them suggestions or information or whatever, which could really get you in trouble.
Yeah,
thank you, Skip. That would certainly be my preference. I guess I just have a hard time saying it out loud. But yes, of course, by all means, say, I know the person. I
That
know
you
the
should talk
person
to.
who can answer every single question
Exactly.
you have. And if I can't answer a question, I will be able to refer them to somebody who can. If it's right for them, if it's not right for them, if there are other options available to them with the policy. Pardon me, I also do that automatically. When a policy comes in with my hospice person, for example, first thing I need to do is look and see if there's an accelerated death benefit offered by the company. Because if there is, she's going to qualify for it. And that would be the best deal for her, not to sell it. So I look at, I do look at all options they have. Would they consider taking a loan? If there's a cash value, do they want to take a loan? Then they may ask me, well, what's the difference? Now, I cannot sell a policy that's got a loan on it. The difference is they will get to keep their policy as long as they return the loan. But they're not going to get as much money as selling it. The same thing with these accelerated death benefits. They're specifically for people with a terminal illness, but each life insurance company has a different one. Some of them require 24 months or less to live and then only pay out 25%. Well, that's just crazy. At 24 months, I should be able to get between 50 and 60%. Some of them say, well, you only have 6 months to live, but then we'll pay you 95%. Well, who cares at 6 months? I want the money now when I can do something with it. I don't want you to hold on to it until I can't enjoy anything. So it's all really their choice. I love the Joey story with the stereo and his sister's wedding and everything. I mean, that's a beautiful viatical story. And they don't, the ones that are that sick, I don't often get such positive stories out of it. But if it's going to help them, if they need the money and they want to make their own dreams come true, go for it. If I can help, by all means, I will. Life settlements, I tend to stay in touch with people, but they all often just, they go on with their lives. They're happy. I just spoke to a woman just a couple of days ago. I finished selling her policy probably 6 or 8 months ago. Small policy. I think it was $125,000. The sweetest woman you ever want to meet. Never met her. We only spoke. I don't even think we did a Zoom. And didn't get her a lot of money. I'm thinking it was maybe $30,000 or something like that. And that was it. She sent me a lovely note. But I just called her a couple of days ago. I sent her an email. And I said, I was just thinking about you, wanted to check in, see how you're doing. And she was so happy. She was happy to hear from me. She was happy with the result. She never looked back. She was relieved she didn't have premiums anymore. It really is a win-win when it's done the right way and for the right reasons. And that's what I help them figure out. I don't make decisions for them. I never sell, ever, ever. I don't sell. I don't try to sway people one way or the other, but I do point out what I believe they need to know so that they have the information they need to make the best decision.
Awesome. On that note, we're going to conclude, Carol.
Thank you for having me, Julie.
Thank you for
really
being here and being
appreciate
part
it.
of our group. You are, you're a permanent part of our group. So you're always here. You're always there available for all of us.
Thank
Only
you.
last week you wasn't.
Skip's the one that got me here. And I met Seb. Where's Seb? Is he still there? Hi, Seb.
Hi.
I met Seb recently. I'm joining him as well.
On my podcast. Very excited.
My very first podcast.
Oh, nice.
Ta-da!
I had to ask him what a podcast was.
It's easy. It'll be fun.
All right, everybody. So, any last
Any
tidbits?
questions? Feel free to email me anything. Liliana, you can just send me those policies if you want, and when you do
Okay.
the cover email, just remind me of why you're sending them. You know, this is not for now, in other words. Okay, and give me
Got
your,
it. Thank you, Carol.
you're very welcome. Lin, is Lin still here?
She's gone. but
Okay. Yeah, because she said
we
the
got you
parents have
covered.
lots of policies. That is such a great situation settlement wise, because assuming she wants me to, I would look at all of them and say,
Okay,
this
we
one is
will,
garbage. Let's sell this.
yeah,
You keep those.
all right. Okay, everybody, you guys have a great week. We'll see you next week. See you on,
Thank you, everybody,
thank
for
you so
coming. I
much.
appreciate it.
Thank you. Thank you, Julie.
Bye.
Okay, have a good week.
Bye.
Take good care, everybody.